Now, what does growth mean? Growth is generally that faster growing, more potential for appreciation in your investment, meaning you can see the value of your stock go up quickly. Now, that also comes with more risk. The thing that you have to understand about growth is that it's also tied to the strength of the economy and interest rates. When interest rates fall, more money generally enters the economic system, which creates more opportunity for growth companies, startup companies to raise money and grow quickly. You saw this happen in 2020 and 2021, especially when interest rates went to zero. Startup companies, tech companies, growth companies boomed. Why did they boom? Because they were able to get their hands on unlimited amounts of money for essentially dirt cheap, and they were able to grow very quickly. And so that's when you saw these types of growth funds particularly grow very quickly. Then came 2022. Things started to turn around very fast because in 2022, interest rates started to rise. When interest rates started to rise, it became much more difficult for these growth type of companies, these startup companies, to get their hands on more money, which meant they had to ease their foot off the gas pedal, and some of them went bankrupt, some of them had to do layoffs, some of them had to consolidate, and that was where it made it much more difficult for these growth companies to survive. Even in 2023, we're seeing a lot of growth companies struggle because of the higher interest rates. And so this is where you have to understand that growth companies are volatile. You're going to see periods of booms, periods of busts, but again, if you want to win in this game, you have to be consistent and understand that you're trying to invest for the long term, because now you believe in the long-term future of the economy. You believe in this long-term future of technology, and these types of growth funds can give you exposure to that, but it is riskier, which means you could also lose more money. So this is where now it becomes your job as a financially educated investor to understand how aggressive you want to be in your investments, meaning how much risk are you willing to take? The more risk you're willing to take, the more upside that you can see, but the more money you can also lose. And this is where you have to understand, if you want to make better investment decisions, it helps to understand how the economy works and how these economic decisions will affect different types of investments, like how interest rates will affect growth companies. Higher interest rates make it harder for growth companies to grow. Lower interest rates make it much easier for growth companies to grow. So it gives you kind of a different type of hedge in different pieces of the economy. But this is where now, if you think that we will see lower interest rates at some point in the future, that could create a big boom again for growth companies, which could create another opportunity for you. Right now, we finally have the ability again to start earning some interest on our savings. And this is not by saving your money in a traditional savings account, but by saving your money in a high interest savings account. I was just checking my high interest savings account today. I have a handful of them, but one of them is paying me just over 4.8% interest. This is interest that I'm getting not for keeping my money tied up in a CD. This is an FDIC insured bank. This is interest that I'm getting on my savings for doing nothing except keeping my savings there. Now again, 4.8%, yeah, it's a lot better than 0.1%. Maybe that's not going to be able to really outbeat inflation by huge numbers, but it's way better than what a lot of traditional banks are paying. And so now, if you are waiting for a good investment opportunity, like I have savings that are sitting there waiting for investment opportunities, that's why they're there. Well, instead of just sitting there doing nothing, at least you can earn some interest on your money. So if you have cash put aside, you're looking for good investment opportunities, you can't find them, maybe you think real estate prices are too high, stock prices are too high, that's okay. You don't got to jump in. But at least now you can earn something on your savings. And as interest rates go up, well, that also means that you can earn higher interest rates on some of your savings. So look into high interest savings accounts, but you have to understand two things. Number one, understand what the FDIC insurance limits are. Today, it's about $250,000 for individual accounts, $500,000 for joint accounts at one bank. So understand that if that bank were to go under, and you have more money saved in the bank than what the FDIC protection allows for, that means that you could potentially lose money, assuming the government doesn't bail out the bank like they did before or bail out depositors. So you need to understand that. And if you have a lot of money, you can also divide that up amongst different banks, different high interest savings account banks. And the second thing is you want to make sure you're using a reputable bank. The way you do this, just do a bunch of Google searches, learn about the bank, make sure they're FDIC insured, make sure they're a legitimate bank. There's a lot of different options out there. There's a lot of blogs out there that can help you out with this. There's a ton of resources. So just go check it out. Look into saving some of your money in a high interest savings account, because if you're not earning at least 3 or 3.5% on your savings right now, I mean, you're really just losing money by not moving some of your money into a high interest savings account.
If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.